Are shares of Apple even worth buying after the company reported their Q4 earnings? We'll go through all the numbers like we always do here on the channel. We'll also obviously look at this from a technical perspective. Very interesting technical formation the company is making in the shorter and even the longer term. But the question I am asking myself is, if you already own shares of Apple, do you buy more? If you don't own shares of Apple, do you run out tomorrow and you buy them? Should you even consider selling these shares, considering for the last 5 years, you've had tremendous performance in this stock, up over 235%. In fact, on any longer time frame, you just have spectacular performance, including year to date, up a whopping 39%. But is the gas tank running low over at Apple? We'll have to talk about that on today's show. What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Apple. Started their Q4 earnings after the bell, revenue coming in at $89.5 billion, in line, just flat revenues. And that was expected, right? Nobody was expecting really blow your doors off type earnings, but this is a quarter where you have a lot of those new iPhone sales. And you just are in an iPhone market and a PC market, which we'll show you when we get to the company's different segments and their sales by category. You'll absolutely see there's some categories here that are absolutely under pressure. And as we start to look forward, Wall Street's expecting Q1, which is really kind of a holiday Q4 for this company, to come in at, we'll call that 5% growth. They are at and I'm saying Wall Street is expecting this company to be able to reaccelerate these revenues next year. Now, one of the areas where it could potentially come from is the company did announce across their whole service line. This is Apple TV, Apple News, their storage business, all that kind of stuff. They announced price hikes. And so potentially you could be seeing some revenue growth just based on price hikes. And you also notice the services business over the last year on a quarterly basis went from 19.2 billion all the way up to 22.3, while your product sales, look at this, folks, in an inflationary environment, in fact, actually went down from 71 billion down to, we'll call that 67. So you're selling less products over at Apple, but you're able to grind out more money on the services. Now, that has been the long-term thesis, and long-term, I'm talking about maybe over the last 5 years with Apple. Wall Street has kind of telegraphed that, and the services businesses obviously comes with just absolutely succulent margins. Off of the $67.2 billion in product revenue, you had to pay out like 42.5 to gain that revenue. Obviously, still very juicy margins, but look at the services business, $22 billion in sales, just $6.5 billion in cost. Just an absolutely phenomenal business. That means your gross margin over the last year actually grew. Despite total net sales declining over at Apple, look at your gross margin. Went from 38 billion up to about 40.5. And again, that was driven by the fact that yes, you had lower product sales, but you had higher gross margin sales in the services. And so this is the direction this company is going in. And I don't think anyone feels that this company is going to get off this path anytime soon. And anytime soon, it's probably over the next 12 to 24 months. I don't see a reacceleration in product sales. What would reaccelerate the demand for iPhone or iPad or the earbuds or whatever? Like, I don't see that. I certainly don't think a $4,000 set of ski goggles that only a small amount of people are going to be able to afford and only a small amount of people want to buy. I don't think that reaccelerates product sales also meaningfully, because again, while I expect many people to buy the Apple Vision Pro, we are talking about a company with nearly $300 billion worth of product sales. In order to move the needle there, even on a $4,000 product, they have to sell, obviously, a lot of units. Now, the company has, over the last year, done what a lot of companies have done, and they've cut some of their expenses. On the SG&A line, they went from, we'll call that 6.5 down to about $6.2 billion. Your R&D ticked up. So they got something cooking over at Apple. And we've talked about this quite a bit over really the last 2 years or so. Look at your R&D spend from $26 billion to about $30 billion. We know it's not on the phone, because what did they do with the phone this year? They made it titanium, and I think it was like 1 ounce lighter. If you had to spend $29 billion to make a phone 1 ounce lighter, then I would say the answer to the question on Apple is you should absolutely sell these shares. If that's what they're spending their R&D money on, and that's the best they can come up with, well, then this company is probably seeing its better days, at least from a growth perspective. Not saying the stock is going to go into the tank, but just from a growth perspective, these days of outperformance might actually take a little bit of a breather and a stall. The counter argument to that is they've got something cooking with this R&D, that they're actually going to come out with a product that really moves the needle. Because when you come down here to the product categories, obviously the iPhone is still the only thing that really, really moves the needle. And they actually had strong iPhone sales from 42.6 up to, we'll call that $43.8 billion. Look at your Macintosh sales. I guess this is kind of like good news, bad news, right? Okay. On the Macintosh computers last year, you had $11.5 billion down to 7.6. I know earlier this week they announced new MacBooks, but the thing is, it's if you've bought a MacBook in the past like 2 or 3 years, there's not a big reason to upgrade unless you're one of these like power users, which again, for a company that's doing $300 billion in net sales, there's just not enough of those power users that need that extra 20%, extra 30% performance boost that Apple is giving you every year on its products. So you're not having a big refresh cycle here. Now, we've seen Intel, we've seen AMD, and TSM as well. They've all insinuated that the PC market's coming back, but obviously you've got competition there from Dell and all the other makers of traditional PCs. Apple's obviously going to gobble up some of that, but look, it's going to tough to be like reaccelerate this $7.6 billion into something very tangible. Your iPad numbers also sipping, your wearables also slipping, going sideways. We read a report earlier last week that they're going to refresh the headphones. Maybe that spurs some more sales, but unless you lose one of those earbuds, which I guess is pretty easy to do since I've lost one more recently myself, well, I guess that's the only way you get people to upgrade. But really, it's all about your services business from 19.2 to 22.3. So if this R&D is all about the services, well, I guess there could be some brighter days ahead for Apple. Now, from the reportable segments, these are your different geographical regions. You actually saw pretty steady growth. The concern is with Japan. You went from 15.5 down to about 15. So that could say something about Apple's products in China. It also could tell you something about the Chinese economy. I'm not exactly sure what it was saying at the moment, but the fact that you were able to grow sales here in North America, but you actually saw declines in China, not necessarily that great. Now, from a cash perspective, look, it really doesn't get a whole lot better than this. The company's got a boatload of cash up here. They got another $100 billion down here. Now it went from 120 down to 100, but you come down here to the term debt. They've ticked off some term debt here. They've ticked off some of their other kind of shorter term paper as well. Company, as we come down to cash flows, is just a cash flow generating machine. This is a 12-month period of time. And look, we're kind of numb to these numbers, right? $97 billion of net income, okay? This is not for the last 15 years for Apple. This is just over the 12-month period. We had $97 billion worth of net income. That's incredible. Last year, we were closer to 100. You notice that cash flows did tick down from 122 down to 110. But again, 100, this is like a very, very first, it's not just a first world problem. It's like first world problem on a beach in Malibu problem. $110 billion worth of operating cash flow. Company does a little bit of property, plant, equipment, but just $11 billion. I mean, when you do $110 billion in operating cash flow, $11 billion on property, plant, equipment, not much. So what are they doing? They're rebuying the stock. And so that is absolutely helping prop the shares up. You bought back $89 billion in shares last year. This year, $77 billion. They were slightly more aggressive on the repayment of debt. 9.5 last year, over 11 this year. Paid back some commercial paper to the tune of about $4 billion. So look, the company will just continue to buy back the shares. They'll continue to pay a dividend and raise it. You notice over the last year, despite retiring shares, the dividend payment continues to go up about $15 billion for the year. And so that will help the shares in the shorter term, but we are seeing after hours shares of Apple are trading down. I'm not surprised by that. From 177 down to about 171. More recently, shares of the company did hit all-time highs up here at 196, but we've not been able to break out of the downtrend, which is lower highs, lower lows. We are in a nice little channel here. Looks like we're going to want to retest, maybe make a new lower low. That would probably be be the first place where I would be like, oh, okay, maybe I take a shot at Apple. Might come down here at about 160. I get more excited. I've got a green box on this one. It would be south of like 155, we'll call it, on Apple. You get into that consolidation. Now I can kind of put up with the fact that the company doesn't really have strong revenue growth on the product side. In fact, it's gone negative. But you should see some rebounding and stability in Mac and iPad into next year, also the wearables business, and that will feed into your services. As long as this iPhone number doesn't go in the wrong direction, and it absolutely didn't, that means this services business, people adding memory, adding news, adding Apple TV, whatever it might be, well, it continues to go up. Now, could this company do something transformative? Abso-freaking-lutely. When you doing $110 billion of operating cash flow for the last 12 months, and you've got well north of $50 billion in cash sitting here on your balance sheet, not that you have access to all of it right away, but a company like this has almost endless access to cash, whether it's cash on the balance sheet. The company certainly could issue shares and go make an acquisition. They could go buy ESPN. They could buy the entire Disney company. So obviously a lot of things Apple could do to turn things around. But I think in the near future, I think the concern I have with Apple is Wall Street's expecting this to reaccelerate into 5, 6, 7, 8% growth. And I'm just not seeing enough here with these financials and the momentum in the products to really believe this is going to happen. So if that doesn't happen, shares of Apple likely languish and kind of trade sideways. I would say probably between about 135 up to about where the shares are today. Wouldn't necessarily buy the shares today, wouldn't accumulate if you're on some kind of drip or you're in some kind of automatic investment. It's not like I would turn it off with Apple, but I wouldn't run out and buy Apple shares tomorrow. There's nothing here that is very exciting. I think there's other stocks that have more upside potential based on their story that they're telling Wall Street, turning more profitable, driving more revenue growth, creating new products, tapping into new markets. Until Apple shows that to us, and I think we really should just wait until Apple shows us a new product and shows us a new service that it's going to be its next 5, 10, 15, $20 billion business. Until we actually see that, I don't really see any reasons to accumulate shares at this moment. And at the same time, if you own a couple shares of Apple, no reason really to sell as well. Keep collecting those dividends, watch them buy back the equity, and in that case, at the very least, you'll be keeping up with the market. And if you're lucky, Apple will continue to outperform. Hopefully you guys enjoyed today's video. We'll be back again on Friday for the Fang Stock Recap Show. Until then, good luck with your investments.